a lot with the European Securities and Markets Agency.
So if we are going to continue in terms of protection of consumers, I would like to ask John if there is any provisions in this regulation regarding bankruptcy of a specific crypto exchanges, for example, or in case of hacking. Is there any protection by design provided by this regulation?
Yeah, I think just to highlight earlier, the agreement reached in MiCA right now, the agreement reached MiCA right now, it's a high-level political agreement at this stage. The exact drafting or wording would be at level 2 at the RTS level, which may take weeks, if not months, to finalize. So just so to make sure I level set that. I think from a political agreement, to the extent that it's information is public information, the first point on the sort of ring fencing or segregation of assets. So the likes of crypto asset service provider, there would be a provision, at least the expectation is to have the assets segregated from the crypto asset service provider.
So it means that you have to provide a way to prove that you have segregated all the assets you have from your customers.
Yeah, I think similar to what is currently in discussion in the US by the SEC called the SAB 121. This current discussion is to make sure that where you are a platform provider, a crypto asset service provider, they're providing a trading platform, at the same time providing custodial services, it is important to make sure that there is a clear delineation and segregation of duties. And in the context of custodial arrangement, there is a focus in at least the MiCA regulators to ensure that the assets are segregated from the insolvency risk and the bankruptcy risk of the crypto asset service provider. Because what we see now in recent times, with public Celsius, Voyager, just the last few days, it's exactly the same problem, because if you think that your crypto assets is held with your service provider, if your service provider are not putting it in a completely segregated assets that is ring-fenced in your interests, what you have is you're taking unsecured credit counterparty risk. And what we're seeing live to date is many of the clients right now that put their trust in a lot of these crypto service providers that have gone bankrupt. They have now do not have sort of any access or title to the crypto assets, because that crypto assets has been rehypothecated, or what we call staking. And as you see right now, with all the sell-off and deleveraging, they do not have recourse directly to the assets that are no longer within their control. I think this is a key focus of the regulators behind MiCA, is about consumer and investor protection, financial stability, and market integrity.
Let's take an example. For example, I'm a user of a specific crypto exchange. This crypto exchange is going to be on bankruptcy. Which kind of actions I have against this platform? What can I do?
So at the moment, as you know, largely crypto asset service provider, most of them are regulated under, let's say, in Europe, 5th MLD, which is light touch. But in terms of your market protection rules, insider trading rules, market abuse rules, those rules that traditionally exist in traditional finance are not prescribed and provided in crypto assets ecosystem. What MiCA wants to do is to provide the same level of investor protection, transparency, market integrity rules embedded into the ecosystem, at least with the regulated service provider. Now, to your second question about the liability from hacks, at least at the political level agreement in MiCA, there is a provision that where there's a custodial arrangement in place, will be a provision to be drafted where the crypto service provider will be liable for failures or hacks or losses due to sort of activities that they could prevent. Now, obviously, this exact drafting is still a huge debate. To the extent that we, as part of the Association of Financial Markets in Europe, are basically advocating is to ensure that what we're seeing in the traditional finance, where we provide custodial services, one, it has to be attributable to some sort of culpability, i.e., gross misconduct or willful misconduct or gross negligence standard rather than a strict test standard. But this exact wording is yet to be trashed out. And I think this would be one of the hot topics to be fleshed out when they draft the exact level 2 drafting.
You have highlighted a really interesting point. So it means that now crypto assets are treated like traditional financial instruments. So we have duplicated traditional systems and traditional obligation into actors of this ecosystem. But in this perspective, do you think it could be a mistake regarding how blockchain technology works, regarding which kind of liability could have any providers of any solution regarding the crypto assets? Do you think it's a mistake because a lot of blockchain key players are currently feeling that it's a mistake, that it's not a fully customized regulation? What do you think about that, for example, Dimitrios?
Regulators are lazy people.
Lazy and crazy, no?
I don't know
Both of
about
them?
crazy, but lazy for sure. And I will explain you what I mean exactly.
We are going to start a fight here.
No, it's not about
yes.
fight. For example, the transfer of funds regulation, but before going there, you have a brand new asset out there, okay? And you need to identify how you are going to treat it. And in order to understand the new beast and the new creature in the room, you start, this is behavioral economics, it's anchoring. You look at this and you say, it looks like a security, so let me regulate it like a security. Oh, it looks like a commodity, let me regulate it like a commodity, and protection and consumer protection rules apply. So if you go back 3 years, 4 years, everybody was dividing the tokens between payment tokens, security tokens, utility tokens, because this was the structure of all the already existing regulations.
Yes.
In the blockchain resolution of the European Parliament, we said tokens are tokens. So you need to have a bespoke regime about tokens and no need to create a new regulation whenever you have a blend of technologies that create a new tokenization of value. For example, MiCA excludes NFTs.
Crypto
And they
lending,
ask in the regulation
NGFI.
for a bespoke regime of NFTs because obviously following the traditional way of doing things leaves
But
something
I heard
outside.
in the coming 18 months, MiCA 2 will come to cover those aspects.
Well,
So-
okay, it's 12 months for e-money tokens and asset
Yeah.
reference tokens, and 18 months for the rest. But my point is that you always start from something, if you are a regulator, that you understand. For example, anti-money laundering, very important issue. How we wanted to transpose the FATF recommendations into the European Union law? By taking a regulation which is already 35 years old, the transfer of funds regulation, and try to push in this old box a very new thing. Of course, you have this product. Is it the appropriate way to deal with something that has inherently different features? For example, you can track back every token. Know your transaction is much more important than know your customer in the blockchain environment. So I hope that sooner or later we are going to have a bespoke regime on crypto assets and anti-money laundering, and hopefully sooner or later we already have the conversation about MiFID II. Obviously,
Yes,
MiFID
yes, yes,
I
sure.
is irrelevant.
But the nature of obligation we put on those new actors because they are new. When you're talking to a traditional bank which exists in centuries, they have the ability to provide the process, the tools to make it real, all the AML and KYC obligation. Do you think putting such kind of really important level of AML, KYC and other obligation like capital requirements, human resources, backup plan, etc., will not stifle and reduce the competition and the entry of newcomers in this industry? What do you think about that?
No, it won't.
No? You think it's not true?
No, we need to differentiate between. Sorry, we do need to differentiate between the the product that we are talking about and the business and the regulation. So starting by the regulation, the principle of regulating something is all the same. That's why we have, certain provisions that relate with cooperation. Now we are extending the authorization process to crypto asset services as well. And honestly, looking at MiCA, you can clearly see that MiCA is not perfect. I agree on that. It's not perfect, but it's shaped to a product that is not in any other sort of regulation. I do understand the point about regular banking or regular credit and financial institutions. I understand it is we are referring to new processes that need to be in place for these new entities, entities that you work with on your daily basis. But this is actually an opportunity to make Europe what it's going to be a competition place, very competitive.
It's an international competition. Don't forget it.
It is international, but it's not. Europe won't be competitive at all. I agree on that for non-compliant entities. For those ones, there is no space in Europe for them. But for other sort of entities that are willing to put themselves forward, then Europe is going to be a very competitive place. And it's going to be the same as GDPR is for data protection. We are going to be an example. The thing is, it's a new product. It's something, crypto is something so recent, guys. And if you look at banking, something so, as you mentioned, so it's a dinosaur in the financial markets, isn't it? But crypto, no. So we have a lot to learn with them. And the regulations, they are evolving. They are not perfect, but they are evolving. They will keep evolving. That's why, within 18 months, they will have to reassess it, not only on MiCA, but FTR as well. But this is to ensure that, first, we protect our consumers. I use crypto, and honestly, I want to be protected.
Ah, disclose your wallet.
It's to protect you guys that working in the industry, because it's to ensure there is a play level field. We receive complaints every now and then that there is no fair treatment for entities, because there is no harmonization of legal requirements. There's so uncertainty that it's completely uncompetitive for entities to play in Europe at the moment. So with MiCA, FTR, and other pieces of regulations that are coming up, this is going to bring the certainty, and this is going to open the doors for you guys to ensure that you have your place in Europe, and you're going to be competitive enough, not only with Europe, but outside of Europe as well.
Okay, so I can tell you, as an actor of this ecosystem and as a president of French Blockchain Federation, that we receive lot of demands regarding that. How can we take this regulation? They felt blockchain ecosystem actors, like you said, like, I'm a banker, you want to make any crypto assets services, come into my room and you have to respect my rules. It's the signal they sent, unfortunately. They receive this kind of signal. That's why we are afraid about the international competition. So, because let's say honest, if I'm going to establish in Africa and I will deliver services to European citizens, what can we do? In fact, quite not so much things. So we have to think about this technology is available to everyone, to every company, and Libra is the best example for that. It shows us that we need to think about a global regulation with the same approach. And I know it's not easy for that. So it's come to another question I think is really, really important to raise right now, is regarding the any transfer to non-custodial wallets. Do you have the concrete answer for that? Because it's a huge subject for us. Non-custodial wallets, so it means that wallets which are not provided by a specific custodian, which could be a bank, a crypto exchange, etc., will remain authorized.
The answer to that question is actually not in MiCA, but probably in another regulation.
Exactly,
in the funds transfer
TFR,
regulation.
that's why
yes,
I'm coming
yes.
into.
So indeed, it is possible. It's going to be possible. I mean, it's a means, so there is nothing that is against that. Of course, not anymore.
Do we have to expect a ban of MetaMask or Trust Wallet, for example? No, okay. You will survive.
It's not about banning. It's about the thing is, whatever we do in Europe, we have to comply as well with the global standard setters. And there was this concern raised by the Financial Action Task Force, the FATF, with evidence collected within other work streams that these sort of products would entail more risks to the industry and to consumers. So based on that, they inserted in their guidelines that enhanced due diligence should be performed towards these sort of products. And the way the policymakers understood this was, okay, there are risks, and they are, but you can also use, uninstalled wallets for, because you want to ensure that your entity is protected. There are legit and unlegit uses. But the thing is, there is a risk, and they wanted to address that risk in the funds transfer regulation. But they don't ban uninstalled wallets.
No ban. Take a breath.
Without
will
seeing
be
the
good.
final text, I mean.
Know your customer and know your customer and for the first 1,000 euros.
Okay, not €1.
We removed it.
I'm great to listen that.
Just to add to that, the issue about the threshold for unhosted transfer wallet is something that most regulators are grappling with. And we started with FATF making recommendations that this is an area that's still in discussion. Obviously, they are recommending that if a crypto asset service provider are basically transferring assets to a unhosted wallet, then the crypto assets provider needs to make sure that they keep track of the information of the source of funds and the sender details under the travel rule. However, if you look at the UK sort of proposal out there most recently, they've basically departed from that provision. They basically said, we're not going to comply with it because it's not practicable. I think where we want to address the mischief, if to the extent that we have information that the activity raises what we call suspicious activity SARS, or elevated risks of potential risks of illicit finance, then it becomes a reportable event, right? So I think there's got to be some sort of a threshold question there. This is something that I believe at a FATF level still to be discussed, because FATF in its most recent discussion paper said that this is still a point to be discussed with the private and public sector. Because at the end of the day, I mean, for all of you who are in the business of doing crypto assets in the ecosystem, we want to make sure what works, right? Not just technology that's interoperable. Standards with respect to travel rule, there's a core to it because it drives the speed, the frictionless way of making, providing service, the onboarding, the KYC and onboard, and this travel rule needs to come out to a landing space that it is not a domestic or European-wide conference, but it has to be sort of pan and cross-border perspective. One of the benefits of MiCA, to the extent we can get it right, is this concept of passporting. As you know, in traditional finance, passporting of services means if I comply with the national rules, I can provide the same level of financial services to all the 27 member states.
Without need to get an agreement from national authority.
Exactly. So MiCA replicates that concept of passporting, but in a context of crypto asset services. So the services in MiCA is wide. It covers issuers, it covers crypto asset service providers. It looks at the whole ecosystem from the issuance, the transfer, the custody, portfolio management of crypto asset services, advisory, to the extent that the final text can land in a space that meets the private and public sector and achieve the kind of mischief we want to address. For example, illicit finance, anti-money laundering, protection of consumer, market integrity rules being embedded, then I think it will be a win-win situation for both parties.
You have raised an important question which gives us an opportunity to discuss about, I think, one of the most important instruments to manage your risk and your investment in crypto, which are stablecoins. Everyone spoke about stablecoins, and I would like to know if first of all, stablecoins are concerned by this regulation. The second, which kind of stablecoins? Because we know fiat-backed stablecoins, crypto-backed stablecoins, commodities-backed stablecoins, or algorithmic stablecoins. Are they all authorized? Banned? What's your opinion? Dimitrios, do you have any...
Okay. Can you hear me? No. So, let's start with the last type, algorithmic. Algorithmic were removed from the regulation, from the initial...
Because of the Luna case? Or
No,
it
no,
was
no.
previously before?
It was before all this story. Okay, you want some story. Algorithmic were removed from the very beginning because algorithmic and stablecoin, it is on the shoulder of those who provide this to prove us that it's stable. Interestingly, in the last trialogue meeting of MiCA, somebody brought the word back. So we are in the process now that the last trialogue meeting of the 30th of June is concluded. We have a text. We have 5 hours of minutes of this meeting, and they now try to draft a text. I really wonder if we are going to have algorithmic stablecoins in the final version and how we are going to regulate this thing. But this was part of the asset reference tokens, not e-money tokens.
So they are classified into this category.
Yeah, there are two basic families of stablecoins. The asset reference tokens, Libra type, or something that is pegged to a commodity, Tether Gold.
Okay.
And all these are asset reference tokens. And we have other types of stable coins that are pegged to a fiat currency.
Okay.
Circle's Eurocoin. This is
like
an e-money token. In order to issue this kind of token, you have to have an e-money institution license,
Okay.
or to be a bank.
It's clear now. If you want to issue your own stable coin, you have to get the e-money license
Not stable coin. If you
banks.
want to issue an e-money token, you have to be either a bank or an e-money institution. If you want to issue an asset reference token, you need to have a MiCA license. Of course, nobody prevents you from issuing an asset reference token if you are an e-money institution or a bank.
So is there any control in terms of reserve funds? For example, it's like Libra, it means that it's backed by fiat, different fiat currencies. So is there any obligation in terms of reporting, etc.?
Obviously, we have a lot of obligations here. You saw the Luna case, eh? How much of your reserve have to be in place in order to redeem the request of the people? So, obviously, Luna impacted this story. Now, in the beginning, I mean, I don't know, correct me, Joana, if I'm wrong, we had 30% of reserves required. It became 20. Now, I don't know what happened in the last trialogue. Maybe we have even more, and we have two different layers of treatment here. If you are a significant token regulated by my friend here, most probably you have to have significantly more reserves, which makes a lot of those American projects less profitable to operate in Europe.
Why?
Because the vast majority of the major players we see over there with their stable coins that are pegged to currency, they have invested the 95, 98% of their reserves. If the European Union says, no, you cannot invest more than 70%, much of the profitability erodes. So somebody has to make a cost-benefit analysis.
And currently, those levels are currently applicable to central banks who wants to issue new money?
This is another story.
Yes, I know, but we need to compare it. Because really important, because the obligation...
MiCA does not apply
yes, I know.
to ECB.
I know, but we are talking about creation of a money which is stable, which is currently the main power of central banks. Because stablecoins is a threat for that. That's true. We have seen it. So does it mean that for every private actors we required more requirement than a public entity? It's an important question because it's a question about trust we have in our institution, you know? Though we need to provide this kind of information.
Well, I have the unfortunate fate to be a monetary economist. If Miss Lagarde
Yes.
wants to print money,
Yes.
she needs to buy a sewing machine, go to a forest in Luxembourg, kill all the trees and print 500 euro bills. Nobody can prevent her. If somebody wants to issue an e-money token, he has to have in reserve the respective fiat currency. Or if he wants to issue an asset reference token, he has to have in reserve the underlying asset. Simple as that. So, do you as a consumer don't want to have these asset reserves somewhere in place in order to make sure that if you want your fiat money back, you can claim them in par value in 2 working days without redemption fees in your pocket? Imagine that in the rest of the world, all the asset reference tokens and all the e-money tokens, the companies that actually issue this have redemption fees, significant redemption fees. They make money out of it. In Europe, it's with 0 redemption fee. Is this problem for the scalability of this type of token in Europe? No, it's the opposite. People will think that it's cheaper, so let's try to have it. European Union is not necessarily the best regulator in the world, but by having MiCA in place, we are going to have strong impact in the rest of the world. Because, believe me, my good friend Gary Gensler is going to replicate a lot of stuff of what we are doing here in the United States, and this is a good thing to do. We call it, in the European politics, the Brussels effect. GDPR, yeah, it's exactly the same. If somebody wants to consider himself legit and have the brand of being regulated in a very high quality regulator, he has to come in Europe, set an entity, and replicate what we are doing in Africa, because this is an indicator of strong regulatory background and responsibility. And I want to ask John, how you see this Brussels dynamics, this Brussels effect, affecting the rest of the jurisdictions, maybe in Asia? What is your view about it?
I think there's a lot of interaction between the regulators at the BIS level, at the FSB level, and also at the G7 level, right? Because if you look at today, this morning, US Treasury Janet Yellen just issued a fact sheet on what the US regulations would look like, given maybe a preview of what the crypto regulations of the US would look like. Fresh off the press, is just published this morning in the US time. But they also make reference to what they're seeing in parts of the world, in Europe. To your point, the regulators around themselves have what we call a college of regulators right now. They are talking to each other, comparing notes. And I think there's a realization that you can't create your own walled garden of regulations. You got to have convergence in terms of harmonization to the extent possible in regulations, because crypto, digital assets is global. It doesn't respect borders. If you have digital assets, decentralized, your crypto assets or digital assets could be transferred seamlessly. And I think there's a realization that in order to make sure that there's no race to the bottom, or what we call to prevent regulatory arbitrage, the best thing to do is to make sure that, one, we raise the bar in terms of ensuring that they weed out actors that they do not want in the ecosystem, and also ensuring that this ecosystem is sustainable, not just from a resilient perspective, interoperability perspective, but also from the sustainability in terms of the green agenda. So in one of the tax provision in the MiCA rules is to ensure that the issuers or the users of the crypto assets ecosystem would have to disclose their climate and environmental sort of footprint. And that disclosure will feed into a further discussion in 18 months' time in terms of where they're going to land in terms of the consensus. As you note, there's a lot of discussion initially about banning the proof of work consensus. However, in the current political agreement, that did not succeed. Having said that, climate is part of a very big global agenda, especially also in Europe. And I think in order to have a sustainable ecosystem, it's not just about the technology, it's also about aligning this to the green agenda.
It's a really interesting point because it comes now, we know that impact in environments is really important. We ask from every company and quite every activities to take care about. Does any specific criteria regarding environmental sustainability goals are already skilled on MiCA, or it will come after? Could you let us know something about that, Joana?
They are. So of course, that is the main, one of the main topics right now, isn't it? We need to be environmental oriented, and for sure, I mean, we are on the verge of a new era. And that is being reflected in a series of regulations, including on MiCA. And we know there are some, environmental concerns in the area of crypto assets. The MiCA does envisage something in respect to that. So there is something that the entities, they need to report the consumption, the taxonomy. But
it comes in place in January 2023. Okay. It comes in place in January 2023. We have a taxonomy regulation for financial services, which is horizontal. The European Commission initially didn't want to have any provision related to environmental protection, proof of work, banning and stuff in the text of the European of MiCA.
Temptation was there, but...
Yeah, the temptation was from certain... temptation was there through two parties of the European Parliament, the Greens and the Social Democrats. They have very strong environmental protection views, and they try to push for these views into this regulation. To some extent, and being a member of the Social Democratic Party, I understand that when the poor people in the most remote areas of the poor neighborhoods in Paris are now paying for this environmental transition, why not to pay the major billionaires who make fortunes by mining Bitcoin? I understand the political mentality behind it. Now, accepting Bitcoin into European crypto exchanges because it's the product of a proof of work, they had to prove to us that proof of work is environmentally unfriendly. Because in the end of the day, when you start mining a proof of work protocol, and you can do it with the energy of your mobile phone. It was the protocol of Bitcoin that had problem, not necessarily Bitcoin or the proof of work as.
So does it mean that we need to make a choice between security and environment?
No, not necessarily. Not necessarily. You need to report your environmental footprint if you are a CASP, if you are an issuer of token. And the entities need to report. It's not a big deal. I mean, every entity has to do it. Yeah.
So it's usual, it's usual criteria, not specific for this industry.
Yeah, but the relation as it stands, we don't know yet the final text, but there is not much information about this. It's up to ESMA, if not mistaken, then to set up guidelines on what are the requirements exactly to report, and then for the assessments. And then based on these, further amendments may come as well.
So be ready with the environment, blockchain key players here in the room. So be ready, it will come. So we know environment is really important. We know consumer protection is really important. Do we think that in Europe we'll be able to allow any kind of protocols which comes after? Because as you know, there is new proof, new consensus mechanism which appears. In our industry, the blockchain technology, we see a major evolution in terms of technical aspect, quite between 9 months to 1 year. So do you think that we need to have a list, an exhaustive list of accepted consensus, or it could be a mistake to do that?
Two things. Thing number one, we have two fundamental principles when we're regulating uses of blockchain. First, we never regulate the technology. We don't have a regulation on blockchain. We have a regulation about the uses of blockchain. And we have two fundamental principles.
It's a sectoral approach.
Yeah, it's per sector, yes, but we have two fundamental cross-sector principles. Principle number one, technological neutrality.
And the main one.
And we have a second one,
one of the
though.
most important.
What is technological neutrality? Tell them what is technological neutrality. So, technological neutrality is that if you deliver something in fiat money to make a payment, but at the same time, you can deliver the same payment in crypto, the regulator does not discriminate between the two different means of execution of the transaction. They only put regulation in order to have proportional risk management.
Whatever the system.
Whatever the system. But here is a trap, as it always happens. Technological neutrality means nothing if you are not at the same time business model neutral. And if you say, okay, we can use different technologies, but if we have completely different business models that deliver value in a certain way, then we do not discriminate against the new business model favoring the old business model implicitly or explicitly. Explicitly means I forbid decentralized finance or decentralized autonomous organizations. Implicitly means that I replicate the banking regulations into a crypto asset market. So, yes.
So now I think it's pretty clear that the question is, and I would like that for each of you to give an answer to this major question for us. Is MiCA regulation going to kill the European crypto industry? On your opinion, it's yes or no?
I will speak in the end.
The best for the end? Okay. Ladies
No,
first.
no, it won't. But as I mentioned, we are in the beginning of a new era for the regulation of crypto assets. So this needs to evolve and it's going to mature as it happened in any other sort of regulation. We have contacts with many industry players, and curiously, last week and this week, I asked three different ones what would be the impact for them in terms of MiCA and FTR. I got from two of them that they were extremely keen on MiCA because they wanted to finally have a fair playing field in Europe. Another one was like a lot of requirements. I mean, but I explained my position that indeed there are a lot of requirements, but it's a matter of creating some legal certainty in Europe as well. And curiously, all of them already started preparing, and they have already, products in place to address some of the requirements in FTR and MiCA. One of them, I was extremely impressed with the due diligence of counterparties. I was not expecting that at all, and they were already with products that, ready to put them on the market. So this means that probably the EU players, they already have something that other players in the rest of the world, they don't have yet. Depending on the jurisdictions they are, of course. But no, this is going to be very unstable in the beginning, as it is always with other regulations. But this is going to open the doors for some fairness in treatment in Europe at the moment.
Thank you, Joana. John.
Yeah, just to add, where we see in the banking world is that quite a number of crypto assets providers right now are also making inroads into banking. There are many banks out there in Europe, especially now, looking at providing custody in digital assets, crypto assets, derivative trading, portfolio management, fund management, and cryptos. Now, in order for institutional money to come in, clarity in regulatory framework is key. And I think MiCA, to the extent that we can get the final text in a place that workable for both the private sector and obviously the regulator side, I mentioned earlier, would be obviously an opportunity to set a level playing field and also set the tone for what a global regulation will look like in the years to come. And I think that you shouldn't see this as a killer towards crypto industry, because crypto industry is very resilient, as you see. They've gone through many crypto winter and they survive. But I think in order to extend it to institutional money and institutional adoption, is to embed some of the best practices and principles that we have. Now you might say, I don't want real regulations, but there will be a very niche area rather than a growing area for unregulated crypto players. For those that I mentioned that wants to tap into public money, wants to tap into the European DLT pilot regime, the level set, the rules that were set will pave the way for sustainable innovation.
So if I can resume, you said, no, it's not going to kill because we need a regulation, but it's not so perfect. We have to continue to adapt it. Am I right?
Yes.
Yeah. The best.
I promise to. Yeah, we will take questions.
Yeah, we'll take. Just share your opinion.
I promised to Rémy yesterday that I'm going to entertain you. So I have a story for you.
A new story. So
no, it's a new story. 1835, the Crimean War. The Prime Minister of UK, Lord Palmerston, lost the war. He wanted to be remembered as something else than just the Prime Minister who lost the war. So, he had a major problem in the UK economics back then. If you wanted to build a limited liability company, you had to take the permission from the House of Lords. Because the limited liability company, the decentralized autonomous organization 200 years ago, everybody hated it. It had a very bad reputation. We had John Law's Louisiana company here in France with very strong impact until our days. Have you noticed that in France, the major companies do not like to call themselves banks? They call themselves Crédit Agricole, Société Générale, BNP Paribas. Why? Because of these early times when John Law created a limited liability company and defrauded people under the name bank. So, nobody wanted to be associated with limited liability companies. Economists were against. Adam Smith was against. John Stuart Mill was against. The church was against. The rich were against. The poor were against. The government was against. And at this point, Palmerston made a significant decision. He said, limited liability company may be not associated with good things, but I see there a strong potential to boost capitalism and growth and welfare for the people. So I will do it with my responsibility. European Union was at this critical moment to make a Palmerston-type decision. And they decided to do it. They decided to strategize. What is the definition of strategy, guys? It is what we decide not to do. So they decided not to do DeFi. They didn't touch lending in crypto. They didn't touch staking in crypto. They didn't touch decentralized autonomous organizations and DeFi. They started from somewhere. And they are going to build on this in order to make sure that Europe is going to be the best place in the world to do blockchain. And this is something I want to bring to your ecosystem.
This is the best wishes.
And I want to build on what Joe said. Global solutions, harmonization. I have a Gallup poll for you. How many of you want global solutions, and how many of you want to have a competitive, strong advantage in the European Union in order everybody else to replicate us? I ask you, who wants strong Europe or global solutions? Strong Europe. Raise your hands.
Skeptical.
Global solutions?
You win.
Interesting.
Thanks for that. So, time flies. We just have the time just to pick up 2 questions maximum. I saw you. You can just, no worries, I saw you. We can pick up just 2 questions, and after that, we need to go to an amazing keynote, which will come just after that. So please, you have the mic.
Okay. I think I have the solution because the European Union should implement sandbox methodology to test the implement of regulate and the actor of the ecosystem. We must work together.
I couldn't agree more, to be honest, like perfect words, because, but I think there is a shift as well in the way that we do regulation. 5 years ago, regulation was amongst, a very elite sort of people that had the right to say what policies should be made of, but with no sort of technical expertise to actually shape the regulations to the different products and the different things that should be shaped to. But you can clearly see that nowadays, and for instance, the only reason why I met my colleague here, Dimitrios, is because of this cooperation with industry. I hope that not only for the regulations that are about to come, that we can all work together, but also for the guidelines that are about to be assigned, that we can all work together. You see already in other areas, that not only the EBA, but the ESMA, IOPA, even the ECB, there is a channel of communication with the industry. Sometimes it's not perfect. We are still talking about something, there is a very skeptical perspective from certain group of people about this interaction, but it's changing. And I hope that this sort of interaction that we have here, but in a more formal way, this is going to happen in the future. And I'm pretty sure it will, because it's already predictable.
Yes, thank you.
Thank you. Yeah, thank you for the answer. I think we have another question.
I heard a very interesting idea that any kind of asset that will be issued in the private sector should be backed by something, which kind of brings me back to what is actually euro or dollar backed by right now, a part of huge pile of unpayable debts?
Sensitive question.
What's the question?
So if I understand well, so which kind of guarantee we could have in terms of issuance of euros backed by something from the ECB? Is this backed by commodities, something like that?
Because what I understood, like you are actually in favor of banning private entities from issuing tokens that are not directly backed by something. Shouldn't ECB also be banned from issuing more euros if they are backed by just a huge pile of unpayable debts?
So since the end of Bretton Woods agreement.
Yeah, it is the end of Bretton Woods, and we had the end of Bretton Woods for a very good reason, because the reserves in gold were not enough to sustain the growth we had in place, and this is the very good reason why Milton Friedman and other people said, yes, we need to abandon the Bretton Woods, and this is the conflict between the neoliberals and the traditional people like Hayek. And why you laugh, my friend? It's not possible to do this, because you need a circulation of money in a way that can sustain the growth of your company, unless you have an endless access to reserve of gold. Hayek lost. Do you know why? Because there is no evidence.
I think the final round is coming next year with the inflation levels reaching 2 or 3.
Yeah, but the inflation is not necessarily the product of the monetary policy of a country.
Yeah.
Sometimes you have a problem with the oil. You don't have oil and the prices skyrocket, and then you have other problems. So, yeah, Milton Friedman here was wrong. It's not always a monetary policy problem.
Thank you so much for this question. Thank you so much to all of you for your attention, and please raise your palm for our panelists, please. Thank you so much. Now I invite you just